Good morning. My name is Sally Gimmon, and I'm the owner of the TrustIsyou.com. I want to go over both these trusts and explain to you why everyone should know about these. Now, 97% of the trusts in the United States are revocable trusts that are only designed to avoid going to court when someone dies. My mom and dad had that. Susie Orman talks about that on PBS television. What I'm talking about today is what the one percenters, the Rockefellers and US presidents have, and I want to explain this to you so maybe you and I can also have this. Now, the trusts I talk about do three things. There's two trusts, a business trust for 1099 income and a beneficial trust for all investors. The three things these trusts do is A, save you on federal taxes. Everyone likes to save on federal taxes. Also, it keeps your information 100% private. That's important. And number three, keeps you from being sued ever again. The old adage by Nelson Rockefeller, own nothing, control everything. This is what we're talking about. Now, with these trusts, they are going to go from generation to generation. The full name, so y'all have this, it's Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. These trusts are patented. They are in this the IRS code under 643B, like boy, woohoo, boys, 643B, like boy. It's patented, and I write on behalf of a law firm that has trust attorneys dealing with this. And we have an entire team to help you transition from what you're doing into what is happening with the trust. Now, the business trust is for all 1099 income. My brother's brewery, my sister-in-law's landscape design. I have 3 businesses in the business trust, right? I love it. That's wonderful. Now, going to the beneficial trust. I know my podcast is Stop Paying Capital Gains. That's important. But there's so much more that the beneficial trust will help with all investors. So that's what I want to go over with today. Now, capital gains, just for your information, there's 2 versions. Short-term, a year or less, 23.8% of your profits, almost a quarter. That's a lot of money. And there's passive legislation to raise that up to 40% for people making more than $400,000 a year. Not there just yet, but I plan to. So again, short-term capital gains is for almost anything you're doing: crypto mining, crypto investing, stock market. We'll get that to dividends, but wholesaling, wholetailing, fix and flipping, anything like that. You need to know about short-term capital gains. Long-term capital gains are more than a year. Those are going to be 15 to 20% on your profit. Again, a huge chunk of change for most people. Here's something I want everybody to know. I don't care what kind of business you have, but when you're selling it, if you're a nail salon, if you're a Schwann's home delivery company, if you're car washes or a solar panel company, you are going to pay 15 to 20% on the sale of your property to the federal government for capital gains. Can't get out of it unless you have a spendthrift trust. So capital gains are important. Now, the 4 other ways this saves you money. This is important because people are not aware of this. Interest income. So if you have notes like I have, or if you do the BRRRR strategy, like one of my clients, 85 houses in Texas, he was his accountant kept telling him, slow down, you're putting too many houses in this BRRRR strategy. He was going, how come I'm paying so much interest income? With this trust, all he has to do is change the titles over. Not hard. He gave it to the title company to do that. He's going to save $154,000 a year. A year. So now he can add more houses to his BRRRR strategy and make it go faster and faster and faster for him. Congratulations. A third way, capital gains, interest income, dividend income. All of you people out there with stocks and stock portfolios. I don't care if you have it with Schwab or anybody else. You just need to change the name on the account and change the bank account. Not hard. A little bit of paperwork. I'll be honest, a little bit of paperwork to change this. One of my clients inherited his parents' stock portfolio. His dad, kind of an interesting thing to do. I wish my dad did this. He bought 100 shares of all the blue stocks, or what do they call blue belt? The Amazons, IBMs, the Walmarts, everything else. My friend has great dividends coming in, but he didn't realize about capital gains. With interest income, dividend income, rent rolls, if you're making any rent rolls from a short-term Airbnb, Vrbo, or long-term or anything else, all of these are taxed between 10 to 37%. There's 7 different tax brackets. I don't know which one you're in, but there's 7 different tax brackets. And when you put whatever you have into the trust, you're going to save all these taxes: interest income, dividend income, and rent rolls. So again, You're making $1,000 in rent on a house someplace, and you've got 7 of them. This is what a call we had. He's still going to take depreciation. He's still going to take what he's done to fix it up. With the money he's put in to rip out the carpeting and put in new appliances. He's still going to take all that, but he's going to save all those taxes. This is kind of an odd situation. I talked to somebody last night, and he said, I just do everything to depreciation. I don't need to save more money. I'm like, okay, good luck to you. You don't want to save more money? I don't need to talk to you anymore. Because if you can save even more money than what you are already, do what you do and keep on doing it and save money on top of it, that's icing on the cake. That's a cherry on top. Why wouldn't you do this? So again, interest income, dividend income, and rent rolls are either 10%, between 10% and 37%. You need to look at your personal taxes and find out how much you're paying. The fourth way, kind of an interesting one, royalties. Any of you out there who are doing NFTs? Any of you out there who are doing who are songwriters? Or I'm selling this trust? Or I have a client who inherited his granddad's horse farm in Oklahoma, 6 oil wells. I wish my grandparents had oil wells on their land. They didn't. But again, royalties a little bit lower than interest income, dividend income, and rent rolls. Royalties are only taxed between 10% and 35%. Again, the 7 different layers. So look at your taxes, see if I can help you. I'm not out here trying to scam you or tell you anything else. This trust is patented. This trust is written in the tax code 643B, like Bravo. And the attorneys I work on, there are trust attorneys that are backing you on this. This trust has never been audited. And if the Rockefellers and US presidents can have it, why can't we have it? When you go out to thetrustisyou.com, there is a slide deck I go over every Monday night, 8 p.m. East Coast time, for you to go through and my numbers from 2021 and 2022, July 2022, and my new podcast. Please go out and listen to it and like it. I have 9 episodes. It's called Stop Paying Capital Gains Now. Thank you for listening to this. Have a beautiful day. Take care.